Hello and welcome back to the Live for Today, Plan for Tomorrow podcast. I'm your host, Gabe Bodner with the Bodner team of One Trust Home Loans. Today, I've got an interesting topic for you, and that's the psychology of, around or behind when clients decide to do a reverse mortgage or to not do a reverse mortgage. Shannon Hicks actually recently wrote an article that was published called The Five Psychological Reasons Many Homeowners Resist Reverse Mortgages. And I found it very interesting. And as I was reading it, I was thinking to myself, when I meet with clients and I go over what a reverse mortgage is and how it works, right? What are the concerns or objections that clients tend to have? And before we do that, by the way, my process and my team's process is really a two-step process. Our first meeting when we meet with a client is what we call a discovery meeting. That discovery meeting is really designed to learn more about the client, their goals, their wishes, their dreams, and their shortcomings potentially, right? Where is the gap between where they are today in their life and where they would like to be? And what is that gap? And how do we help them to fill that gap? What tools are available to help fill that gap? Whether that gap is because of an income shortfall, or whether that's a cash flow shortfall, or whether that's excess debt with excess monthly payments, whether that's a long-term care planning gap, or whether that's just a buffer asset to have money available in case, just in case something happens, right? Do you have money sitting on the sidelines in cash in the event something happens to your health or to your home or for a family member that you need money, right? All that being said, once again, our first meeting is this discovery meeting. Then we, of course, get into what a reverse mortgage is and how it works. But I believe a reverse mortgage is like a Swiss Army knife, right? It's not just a tool, but it's a very versatile tool. If you envision a Swiss Army knife, right, it has lots of different tools, again, associated with it, whether it's got a knife or a saw or a magnifying glass or a toothpick or whatever. It can be used in different ways for different things. And I view the reverse mortgage to be very similar, such that it can be used for many different things depending on the client's needs and their goals, once again. And so that first meeting is really to establish who the client is, what their needs and their goals are, and to help introduce who we are and what we do and what a reverse mortgage is. Then we put together a solution or a proposal. And the second meeting typically is when we present the proposal to the client and we really show them what the tool, what this financial tool called a home equity conversion mortgage or reverse mortgage can do for them, given their situation and their goals and their risk tolerances, their time horizons, and again, their shortcomings if they have any. So, with all that being said, again, I found this article by Shannon Hicks to be very, very interesting because what I tend to find with many, many clients is we will sit down, we will go over their situation, we'll go over the solutions, and inevitably, at some point, the client will turn to me and say, Gabe, this just sounds great. What's the catch? Right? Or they'll say, this sounds too good to be true. And if it does, it must not be true. And the reality is, I love when a client gets to that point and they again turn to me and say, Gabe, this sounds great. What's the catch? Because there isn't a catch. And it really is that good. This program, this product, this financial tool is truly that good. I believe the problem historically has been that folks in my position as a reverse mortgage loan specialist or loan originator have really presented this product or sold this product as a one size fits all, right? And that simply is not how this product works. It's not a one size fits all. It can do so many different things that we once again have to establish what is the client trying to achieve before we put together a plan and a solution. It's like going to the doctor and telling the doctor that you have a broken arm. And the doctor says, okay, great, we'll put you into a cast. That would be malpractice if a doctor did that, right? The doctor's going to say, great, well, let me ask you some questions and let me feel around. And does it hurt when I do this? And does it hurt when I do that? And can you move here? And oh, by the way, they're going to take an x-ray, right? And so they do their due diligence and then they come up with a recommendation, i.e., again, the doctor makes a recommendation based on the symptoms and based on what they're seeing. I believe our job as reverse mortgage originators and specialists is to do the same thing. I need to find out what is going on in your life, what's going on in your financial world, and what are you looking to once again achieve so that we can put together a plan. Again, this reverse mortgage can be so many different things to so many different people that it's not a one size fits all. So with that being said, once again, when a client reaches that point where they say, Gabe, this just sounds too good to be true, it's because number one, we have very carefully put together a plan for the client that helps to achieve their goal. It's not, once again, a one size fits all. Then we get to the point where they say, okay, this sounds great. What's the catch? There isn't a catch. Once again, we've gone through the pros, the cons, the pluses, the minuses. But that's when the psychology kicks in. Okay, that's when the psychological, sort of almost barrier comes into play, where clients then say, okay, again, sounds too good to be true, must not be true. They're looking for something that is a problem that may not even exist. But because people have been taught and told and trained their whole life, if it sounds too good to be true, it must not be true, number one. And number two, I also believe that this is really where the reverse mortgage industry has created its own problems. Okay. And when I say own problems, I mean this. Okay. The advertising and marketing around reverse mortgages historically was always oriented around the client in financial distress, the client who might be house rich and cash poor, but ultimately might be in a very bad financial position. And the advertising went something like this, right? Are you struggling to make your mortgage payment? Are you struggling to pay your bills and your property taxes, right? That's how the marketing went. And it created this product, in my opinion, that was ultimately designed for people in financial failure, for lack of better terms, right? People who were, again, failing financially or people who weren't in a very good financial position. So the psychology I'm finding is that when people see and hear about a reverse mortgage, they immediately associate the reverse mortgage with being a financial failure. Not all clients, okay? But I find this often where clients say, that's not for me. Hey, Gabe, it sounds great, but it's not for me. Why is it not for you? Well, I don't know. It just doesn't feel right. Okay. Psychologically, emotionally, gut feeling, whatever that really comes down to, it really is this idea that I think people believe that this program is associated with financial failure. And if you do a reverse mortgage, it means that you have failed financially. And that has got to be the furthest thing from the truth. Okay. I will tell you, folks in the financial planning industry, okay, guys like Barry Sachs, guys like Dr. Wade Pfau and Harold Ivinsky have literally studied the math behind reverse mortgages and proven mathematically that if you do a reverse mortgage earlier in retirement, when you don't need it, that you can build and create this growing line of credit that becomes this buffer asset that helps prevent and helps to avoid what's called sequence of returns risks, number one, when there's a downturn in the stock market and you're taking money out of the stock market for retirement. Okay. And when you do that, you're locking in losses in a down market. So by creating this buffer asset, you're able to again utilize this buffer asset, i.e., the line of credit from the reverse mortgage, if and when the stock market takes a downturn and you're not taking money out of the market and you're not locking in those losses. So, number one, again, very, very wealthy and very smart people are doing reverse mortgages, not because they're in financial despair, but because it financially makes sense. Right? So again, some of these folks that I mentioned in the financial planning industry and tax industry have proven mathematically that not only is this product a great product and very flexible, but it works even for folks, especially for folks with wealth and with money and with tax problems in retirement, because they truly can help you to improve cash flow, pay less in income taxes, and ultimately, if done properly, you can actually leave a larger legacy to your heirs, maybe not solely in the form of home equity, but ultimately a larger legacy to your heirs if done properly. Okay. So with that being said, again, the psychological piece that says, hey, this product is only for people who are in financial despair, let's get that out of your head because it is not. Number one, it really is not. It's a great, great product. Number two, I think there's this concern of like this idea that you have this loss of control. Okay, loss of control of your home equity, right? Because many people say to me, Gabe, I've got, all this home equity. If I do a reverse mortgage, then and it's no longer mine, right? I can't access the home equity, or I can't sell my house, or all of these ideas and fears that you no longer control your own destiny in regards to where you live, and having, the ability to sell your house and so forth. So with that being said, okay, the reverse mortgage is simply a loan. It's simply a loan against your home that doesn't need to be paid back until you either sell your home, permanently leave the home, or pass away. Okay, those ultimately are the terms or the times in which you need to pay this reverse mortgage back. As long as you occupy the home as your primary residence, you continue to pay your property taxes and home insurance and maintain the home and HOA dues if you have any and so forth, then the loan will continue to be available and be deferred. So once again, if you get to a point where you say, hey, I no longer want to live in this home, it's no longer a fit for me, or I want to move somewhere else, you simply sell your house and you pay off the reverse mortgage balance just like you would with a regular mortgage or a traditional mortgage. So once again, you have control and you have the ability to sell your home in the future. This does not prevent you from doing that. Okay. It just simply has to be paid back if you sell your house, just like any other mortgage. But in fact, this gives you more control of your home equity because of the fact that with the reverse mortgage, specifically the home equity conversion mortgage with the line of credit feature, we're giving you access to a portion of your home equity that you have available to you at any time for anything you want. Okay. As opposed to if you don't have a mortgage or you don't have a reverse mortgage and you own your home free and clear, you have zero access to your equity. You literally have no access to your equity, no control of your home equity. The only way to gain access to your equity is to sell your home in that situation, or take a mortgage against your home, which of course requires repayment if it's a traditional 30-year mortgage, or do a home equity line of credit. That's option number three, where you can take some equity out of your home, but now you're required to pay it back each month. And that can be dangerous because in a HELOC or a home equity line of credit, you only have typically a 10-year draw period, which means the funds are only available for 10 years. And then after that, it becomes repayment of principal and interest after, again, that 10-year period, which could be, again, dangerous because the payment could go up in that case because it's fully amortized with principal and interest and over a relatively short period of time. So the only real option to access equity without the requirement of selling your home or without the requirement of a monthly repayment is a reverse mortgage. So, in fact, of the four options to access your equity, the reverse mortgage, in my opinion, is the best option and provides the most flexibility. So, this concept psychologically that again you lose control of your home or home equity or what happens in the future, in my opinion, is completely wrong. Okay. I think that there is one other emotional or psychological element that there is some truth to. Okay. And that is that this is new and different in many cases than anything that you've ever done before or anything you've ever been taught before, right? The concept that many people were raised by, which was, you buy a house and you pay off your mortgage someday so that you own your home free and clear. Okay. That lesson that many of us were taught growing up is a great lesson. It's a fantastic lesson. Okay. And I believe the reasons that many of us were taught that lesson is because of what happened with the Great Depression. Okay. If we go back to the Great Depression, when people had mortgages on their homes from their local banks, and there was a run on the local banks, meaning people were going to the bank taking cash out. The banks were calling mortgages and loans due and payable because of liquidity crisis. Okay, they did not have the funds in the bank to stand by these loans and mortgages, so they were calling these mortgages and loans due and payable. Okay, which was a problem, of course, because if people couldn't pay it back, there was a risk that they would lose their home. So the lesson that many people learned from that was pay off your mortgage so you can never lose your home, right? Now, I'm not going to get in the weeds on that because obviously you still have to pay property taxes. And if you don't, you could still lose your home through a tax lien and tax default and so forth. But all that to say, this concept of pay off your mortgage so that you can never lose your home was ingrained in so many people that either grew up in the Great Depression or had parents who grew up in the Great Depression and so forth, that psychological aspect is again been pounded into our minds. Well, I have news for everyone, and that is that reverse mortgages are non-recourse mortgages, number one, okay, which means that as long as you adhere to the terms of the loan, once again, occupy the home as your principal residence or primary residence, you continue to pay your property taxes, homeowners insurance, HOA dues to maintain the home, and so forth, you are not ever going to be kicked out of your home or lose your home, even if the reverse mortgage balance ever exceeds your home's value. Okay. And that non-recourse feature protects you and your heirs once again. In that case where you can't pass a debt on to your heirs, the maximum liability would be the value of the home. And that is it. Okay. But again, this idea that don't get a mortgage because you're at risk of losing your home. Again, pay off your mortgage so you don't lose your home. That came out of the Great Depression, in my opinion. And we have now been going on 90 years since that. We've had major banking reform to include that's where the FHA was actually created from and after the Great Depression to help prevent this from happening. But again, our banking infrastructure is completely different today. And so this idea, this concern that getting a mortgage could put you in risk of losing your home versus paying your home off. Well, I have news for you. You pay your mortgage off, you own your home free and clear. That's wonderful. But now you have a whole bunch of illiquid equity you can't do anything with. It's trapped. It's a trapped asset in your home that once again you can't do anything with. Think about that versus doing a loan, whether it's a mortgage, a HELOC, or reverse mortgage. It's a way to access the home equity. Once again, where the reverse mortgage is the only way to access the home equity without a required repayment. And it's almost like putting a spigot on the side of your home and your home equity where you can open the spigot and take equity out as you need it and then close the spigot and leave the equity in your home for a future date. Okay. This is once again a safe way, in my opinion, a way that you can safely access some of the equity in your home with having that non-recourse feature, okay, from FHA and any reverse mortgage for that matter. They're all non-recourse mortgages. But this psychological barrier that many people have put up in their own minds because of what they were taught. Oh, buy a house, pay off your mortgage, own your home free and clear. I believe that is an outdated mindset. But that mindset, in my opinion, is what is getting in the way of allowing many people to take advantage of this amazing program because it truly is an amazing program with a ton of flexibility. But it's this psychological barrier, once again, that people have created because it's what they were taught growing up and what was reinforced over the years. And there are TV and radio personalities out there. I know of a couple of them, I'm not going to mention them, who talk about this concept of paying off debt, owning your home free and clear, not doing a reverse mortgage. I believe they're just flat out wrong. I actually do. I believe leveraging your home equity to, if nothing else, protect and preserve your assets under management, allow them to grow more so you have more in the future, paying less in income taxes if you take less money out of there, or less in capital gains taxes. Once again, there's a lot of strategy around how to utilize wealth and different buckets of wealth. I was always taught from my financial advisor that having pre-tax money, post-tax money, tax-deferred money, tax-free money is really a great way to diversify your portfolio. Don't put all your eggs in one basket, right? That's what I was always taught by my parents growing up, to not put all your eggs in one basket. Diversify your wealth, right? Many people in real estate, meaning realtors or real estate professionals, are very, very heavily invested in real estate and have a lot of home equity, but don't have a lot of liquidity. Okay. Again, tapping into home equity is creating this liquidity, creating a bucket of liquidity that is tax-free money that can be accessible virtually at any time for anything you want. So I'm here to really, again, get you to think differently, right? Because we put up these psychological barriers in many cases based on what we were taught by our parents, what we've learned over our lifetimes, and it creates this mental block on what we should do, what we shouldn't do, what's right, what's wrong. And I'm here to tell you that reverse mortgages have changed a lot over the years. They are much, much more flexible than they ever used to be. Okay. They're safe from the standpoint that there is a required counseling session that must be done up front for anybody who's on the title of the home so that you understand what this is, you understand what you're doing, you understand the requirements for deferral, you understand the repayment requirements, and that we ensure, and the counselor ensures, that you have your mental faculties, you can make a decision on your own. Otherwise, you might need a power of attorney or a court ordership and so forth. So again, there are protections, what I call consumer protections on the front end to ensure that you know what this is and know what you're doing. And once again, the protections on the back end, the fact that this is a non-recourse mortgage makes it a fantastic program that protects you and your heirs from that concept that you can never owe more than the value of the home. So if you have any questions, if you have this psychological barrier or some psychological, block that is preventing you from getting over that hump, please give us a call, reach out anytime. We'd love to chat with you. We'd love to do this discovery meeting with you to really understand what's going on, what your goals are short-term and long-term. If you have a gap that needs to be filled or closed, how do we close that gap? And is a reverse mortgage the right product for you? Give us a call at 720-600-4870. We'd love to speak with you. We'd love to help you in any way we can. Appreciate you listening. As always, thanks so much. And I hope you have a fantastic day today and every day.